Hey, what's happening, everybody? Tim from Alpha Wolf Trading coming at you with another interview. This one is actually a follow-up interview that I've been wanting to do with the member that has joined MAPPF, which is Prostar, which is also the creator of Pointman, and Joel Sutherland, who has been brought on board as the Vice President of Corporate Development and Investor Relations. I had a conversation with Joel on the phone. We had a great conversation, but I wanted to do an interview so that all the members and anybody else that is interested in MAPPF or Prostar could hear directly from Joel what attracted him to taking a position at Prostar. So Joel, thank you very much for coming in, first off. Second, why don't you give the listeners and the viewers a little history about your background, if you don't mind.
No, not at all. Thanks, Tim, for having me on here. We really appreciate you giving us a little time. So my background is for the last 20 years, I've spent time as a securities analyst for Merrill Lynch. And then while I was at Merrill Lynch, I moved over to become an institutional salesman. And I moved to New York in 2008, concurrent with that shift. And I was covering Boston. So I was covering Fidelity and Wellington and, those other kind of big 1,000-pound gorilla accounts. And I was selling Canadian equities to US institutions. And so one way or another, I've probably taken the majority of Canadian CEOs through Boston at one point. So I've sat through, I don't know, hundreds of non-deal road shows, 10, maybe thousands actually, probably thousands, and then tens of thousands of hours of watching people go through their decks.
So I was going to ask you so if you've been doing this for 20 years, I can't even imagine how many investor decks you've actually looked at or gone through.
It's a lot.
It's got to be tens of hundreds of thousands, maybe.
That might be a bit of a
span,
stretch, but yeah, I mean, it's certainly tens of thousands. And, so that's my Malcolm Gladwell kind of 10,000 decks. And I can pick out a good one, maybe, I hope. So.
All right. So as an analyst, you're looking at the decks, you're meeting with management, you're checking out the market, you're doing a lot of research to determine whether or not this is there's a big TAM, right? And then, what is their differentiator? And is that something that is sustainable, right? I mean,
right.
Actually, why don't you tell me what it is that you would normally look for?
So so there's everyone's different with how they look at companies, but right. my process is, generally speaking, I like to see a good deck, a clean one, not 40 pages with a bunch of nonsense. And I want to see that whoever's presenting it comes across very well and communicates the information and answers questions very well and just has a nice stylistic flow. I mentioned I was in Canadian equities. That means a lot of mining CEOs. And in the land of mining, they've got this thing called the big arm wave, right? It's wide open, it's strike and depth, and it goes forever. And there's a lot of characters that come through your wheelhouse. But anyway, once you have the kind of the presentation boxes ticked, then it's time to do math. And I think the sales side helped me in the former with the deck, and the analyst side helped me in the latter. And all I mean by that is, anyone can do a discounted cash flow analysis, but I think when you're staring at a Bloomberg terminal every day for 8 hours a day for years and years and years, you just start to focus on a few things that matter to you. And I think for me, in the Prostar's case, if I can kind of shift it to that a bit,
Yeah.
what attracted me to Prostar was they're clearly a startup, right? So this is a startup. My view before I joined the company, when I did invest in the last round, and as part of my investment decision, what was going through my head was, this is a company I think that's transitioning from infancy to growth. So that those 4 cycles: infancy, growth, maturity, and then decline. So I think Prostar is kind of right at that cusp of, it's out of its infancy and going to growth. And more specifically, what I mean is, it didn't appear to me that there was going to be any, software, big versions coming out. They had 20 patents that were already issued.
And not just patents, but pioneer patents.
Pioneer patents. And most people don't know the difference between the two. And I'm not going to get into I'm not an expert on it, but I do know that pioneer patents are the ones you want to own. Right. So I kind of looked at this and they got the patents. There's no more R&D. If a customer wants a specific feature, they'll pay for it, and we'll assign the developers to it. But at the end of it, to me, it was just, this is a sales story. It's a binary thing. They either sell it and they sell product and the stock goes up, or they don't and it goes down. But it's not going to there's no curveballs from, oh my God, there's a bug in the software. We've been through testing with Kiewit for 3 years, right? So, and Vasa, our COO, who's effectively our CTO, and his experience of being CTO at Sun Microsystems, I mean, the guy had 5,000 people reporting into him. So, I'm pretty confident the software is okay.
So before you got involved in the private placement, which you said you participated in,
yeah,
I'm sure you met with Paige, right?
I did, yeah.
And he went through the system, and he told you I'm sure he told you the whole path he's taken, which was, he wrote the software up with his college buddies, right? Thought he had a $1 billion program, and then brought in the Sun Microsystems guy and said, do I have a $1 billion system? And he took it, came back and said, no.
Yeah.
And anybody else would have been like, I mean, I don't know. I know that there are CEOs that would have said, I don't give a shit if this thing's going to collapse on itself and when we get to scale. I've been working on this thing for 6 years. I need to get this thing making money, right?
Yeah, start grinding hamburger.
Right. And then when it collapses on itself, we'll deal with it then.
Right.
But that's not what Paige did, right?
No.
He asked him what he needs to do to get to the $1 billion software system, right?
Correct.
And then he chose to do it, which to me speaks volumes, right? I mean, he didn't take the easy path. He took the difficult path, which was 3 years, $3.5 million, fire your college buddies, move to Colorado, hire a whole new staff of engineers and programmers. And he says, okay, do it. Right.
Yeah. Yeah.
And that's the product that was just released last year.
Correct.
Okay.
Which is fully cloud, settle in any currency in any country, any language, data sovereignty in the country of origin with the laws of that country. So, it sounds, I just rattled off about 4 or 5 things, but getting all those ducks in a row is not easy.
It's unbelievable.
And we were on the Microsoft, I think, Azure platform, and we moved over to Amazon Web Services. I mean, you got to rewrite every line of code. So what you just outlined resonated for me, because I am a slow and steady wins the race type guy. I'm not a good day trader. I've never been in and out of a stock in a single day. It's just not, my brain doesn't work that way. So I kind of look at Prostar as being largely de-risked on almost everything but sales. And to me, it's kind of like, okay, well, if that's the case and you've got a good product, and I think you do because you've got Kiewit on your side and CDOT, which is like phenomenal, and you're already revenue positive. To me, this is just, well, let's raise some more money, build up the sales force, and sell. It's not that hard.
Right. So let's raise some more money. Let's get some sales guys and let's go out there and sell. And let's mention the fact that we just had a $1 trillion infrastructure bill that was recently passed. Right?
Right. Yep. That's right. I mean, there's, we all know how these construction bills work. They're a little bit leaky, right? But some of it's going to find its way to actual construction, and that's a good thing. This is a 10-year bill, so they're not dumping one.
So you actually provided me with a little breakdown here.
Right.
I just want to bring this up.
Sure.
So here's the budgetary composition, and this is in the billions, right? Roads, bridges, major products. I think one of the things Paige has always said is that you're not doing anything above ground without having to do something below ground.
Correct.
Right?
Yeah.
All right. I just want to make sure, just because it says bridges, roads, major project, that does not mean that stuff's not going on underground, because there's a lot going on underground on those projects, right?
Oh, there's a ton. Yeah.
Yeah. So you've got power infrastructure. So that's 65 billion. You've got passenger and freight rail. That's 66 billion. Broadband infrastructure, 65 billion. Water infrastructure, 63 billion. These are some big numbers.
Yeah, they are big numbers.
And I have to think that is going to lead to some sales.
It's not going to hurt. There's no way this hurts. There's like 100% probability this helps.
Right.
We'll see how much of it filters down, but whether or not there's a big one-time infrastructure bill, our business proposition is literally, you have a chance to take your utility strikes to zero. So whatever you're budgeting, whether it's 2% of your project or 5%, or sometimes maybe as high as 7 or 8% of your $1 billion project that you're budgeting for.
Because you're anticipating you are going to hit a utility.
Oh yeah. I mean, I have a buddy that owns a construction company, and I was, when I wasn't considering investing in the company, I said to him, hey, do you mind jumping on this? I'd really appreciate your viewpoint on, is it valid? And he, not only did he say, yeah, there's nothing else like this out there, but I can tell you, I just did a bid on a project, which had roughly about, I think he said it was about 30 to 40 million of unanticipated, that they just goosed up their final number by, it was either 40 or 50 million, to account for all the nonsense that they knew was going to happen, because they were sort of familiar with the package of land and what was underneath, just from memory, right? So he basically said, there's nothing like this that's going on out there. I would not only buy this product for my own company, but I'd like to invest. And thanks for giving me a look on this. So
what I find interesting about your story is that, the first thing that I did, because I have a construction background, was I reached out to some people that I know after I'll tell you what, Paige, I was not even going, he was at a conference, I was at a conference, I was booked solid. I had no time. I was back to back to back. And he sends me a note, hey, I'd really like to get 15 minutes of your time. And I was like, man, if I had 15 minutes, I would give it to you. But I swear, I don't. I'm back to back. And, you know, the conference is over. I get a note from him on LinkedIn. I would really like just 15 minutes of your time. And I'm like, you know what? Okay, 15 minutes. I had no idea what
Yeah.
Prostar did.
Yeah.
And all of a sudden, so like a half hour before I'm going to meet with them, I pull up Prostar and I start looking into it. And I'm like, holy shit. If this can do what it says it does, this would be like the holy grail of the construction industry, right? Because I've been on job sites when we've hit a water main or a sewer line or cut the power. I mean, it's a problem. I've never been on a gas line, but thank God. But
Yeah.
I mean, these are serious things, right? And then when you start looking at the numbers, 35 million miles of utilities overlaid on top of the water, which is the deepest in the ground. And we've got all these water issues going on, water lines that have been in the ground for 60 to 100 years. We don't even know. We probably don't even know what the pipes are made out of for those things, right? You start looking at that and you're like, holy, this is like the TAM, the total addressable market on this is mind-boggling to me.
Yeah, I mean, if you really wanted to do it a loosey-goosey back of the envelope, there's roughly, I think, about $1 trillion in construction that happens every year in the US. I might be wrong in that, so save the internet arrows, but let's just say it was $1 trillion. And then if you just want to estimate, okay, so how much of that is disaster strikes? 5%. So 5% of $1 trillion is 50 billion. If my math works. So 50 billion. That's the savings. How much would the whole industry be willing to pay to save 50 billion on an industry that probably makes like 2 to 3% margins?
And that's not, you're not just talking about, I mean, you're just talking about the US, right?
And I'm just talking about construction. I'm not, and utilities,
in the US.
Right. In the US, yeah.
Right.
Yeah.
Not globally. This is a global problem.
Oh, it's worse in Europe for sure.
And did you say earlier that it's any currency, any language?
Correct, yeah.
Yeah. When you start talking to Paige and he starts talking about the curvature of the earth and the 9 satellites and all this other stuff, my head wants to explode. I mean,
yeah, this is, that's a really good point, right? So this is not just a simple kind of, all right, put some dots on a map and wherever you think the utility line is, it is. The key is 1 centimeter accuracy. And unless you factor in the curvature of the earth and satellite positions, and you're building a bridge, like say the Tappan Zee Bridge, right, in New York State, which I think is 100 feet out of the jurisdiction of the Port Authority of New York. Lucky them. But that bridge, you'd have to, from the engineering point of view, you'd have to factor in the curvature of the earth because it's just that long, or in Canada, they've got, I think, a 13-kilometer or mile bridge connecting Prince Edward Island to, I think, Quebec or Labrador or wherever it is. The big projects, you need to factor this in. You can't just go out there with a rinky-dink, thing you bought for a couple of $100. Like, it just, this is a serious piece of software that doesn't leave anything for error.
So it's funny that you're a construction guy, your close friend. He says, not only do I want to buy the product, but I also want to invest. And what's funny about my personal experience is one of my closest friends has been in the construction trade his entire life. I mean, he's 40-year veteran as sales and running crews, and he also is an investor. He actually is now joined the Pointman as a independent rep, right? So I look at these things and I say to myself, anybody that understands the Pointman system and what it does, they get it right away, right?
Right. Pretty much. I mean, especially if they're in the if they're in the industry, if they're familiar with a utility strike and the headaches that it causes and their current workarounds and solutions to avoid them, they see this and they're typically like, oh, I know exactly what you're doing here. Like, this
I
is
mean, it
great.
appeals to the engineers, right? Because engineers are all about numbers. 1 centimeter accuracy, I think, would be something that would appeal to engineers, right?
Yes.
Then you've got the insurance angle, which is if you're bonding a job and you know X percentage is put aside for the anticipation of hitting utilities, right? Why wouldn't the insurance company mandate, look, you've got to use this software so that we can eliminate, maybe your premiums come down on your insurance because you are using the software. Does that make sense?
Pretty much. Yeah. I mean, there's no doubt about it that this saves money. I have some data that I don't think it's not accurate from an analyst point of view. It's not accurate enough. I need to do a little more work, but essentially think about it like this. If you had two jobs going at the same time and you're a big construction company, right? They're both, say, $1 billion. They're both last about 3 years. They're both happening in the same state, at the same time, just in different parts of the state. Let's say one's a light rail project and one's a highway project. If one project uses our software and has virtually 0 utility strikes, and the other project doesn't use our software and has 150, what I can then do is I can say, okay, all I need to know is, of the 150, how many were electrical, how many were gas, how many were water, how many were fiber optic, because there's different costs that you bear for each of those 4 things.
Right.
And there's different, like the gas company will charge you for lost gas. The fiber optic company is not going to do that, but it's way more expensive
because you could shut down 600 businesses.
Correct. Yeah. And they got to fix it like ipso facto. So what I don't have is I don't have the on average, if you have $1 billion projects, it's approximately a 3-year duration. What's your expected number of utility strikes? And furthermore, of those utility strikes, what's your expected number of gas, water, electrical, and other? Now, the reason why an insurance company might find this super interesting is because if we can show them that by using our software, we take that to 0, that all of these costs are avoided. Why wouldn't the insurance company cut you a break for using our software? I mean, we're all familiar with various programs, state driver's insurance.
Yeah, let us put a chip in your car so that we can see how you're driving.
Right.
And we'll knock down your premium. Right.
Right. Exactly. Or you take in New York State, they had, like, if you take the driver's safety training course, you get 10% off your insurance.
Right. Because
they know that statistically people that do that are at least slightly more aware of the rules and less likely to get into an accident. I mean, so that is something that's in Prostar's future for sure. Insurance, it's a conversation that will happen with the fullness of time and data. That's it. And the good news is
every time Prostar signs a new customer, like so far we've signed the zoo, Aberdeen, the little municipality,
yeah,
a couple of colleges, right?
Yep,
which
Grinnell.
I never even thought about. I mean, those are all kind of like their own little cities, right? The zoo and the college. And it's like, okay, that makes a lot of sense. But as to sign every one of these new customers and you start collecting that data, because I think almost all of them have agreed to do a case study, right? I think every one of them.
I I I honestly just don't know. I don't see why they wouldn't agree to it, but
Right.
yeah.
As that data is getting collected, that becomes invaluable, right?
Yeah, I mean they have it forever. So
Right.
now you know, like guys, don't dig over there. Like stop what you're doing,
Right.
you know? And hey, I'm retiring and I'm going to spend 30 days training my replacement. One of the things you do is, hey, replacement, come over here. See this piece of software? Look at my screen. This is a map of everything we've got underground. And the new guy's going to be like, oh, that's cool. Like they don't have that now.
Right. So if you think about it, it's not just, I mean, even it doesn't have to be just everything above underground. It could be any of your assets above or below ground. I mean, we're specifically talking about utilities, but it's an inventory management, asset management software program.
Yeah, correct. Absolutely. I mean, we're not tracking like cartons of peaches across, Georgia to Kansas City or anything like that. But yeah, it is effectively it's a fixed asset inventory management system that positionally can tell you within 1 centimeter of accuracy of where everything is.
Right.
Okay. which is what you want if you're, say, Grinnell College, because or the Tulsa Zoo, because you're like, I just need something that gives me a map of everything we have underground. Guys, leave the room, find the solution, come back when you've got it. And then the people leave the room and go, they scratch their head and they go, well, we better figure this out. And then it's like, okay, how do you, we're the only game out there in town that can give you that kind of accuracy.
Right. All right. So look, I don't want to go into, I mean, you're not the tech guy. I'm not the tech guy.
Correct. Yes.
But now how long have you been there now, Joel?
I have been there a little over a month.
A little over a month, but you went down and you did some training, right?
Correct. Yeah. I've been in Colorado twice and I'm going again actually this Saturday for Geo Week, which is a big industry conference, which happens to be in Denver.
Okay.
So, yeah.
So you've been there, you've had some time to interact with management and the team over there. What's your takeaway?
The culture is amazing. It's stronger than I expected. Everyone is aligned with sales. That's my big takeaway. Everyone understands 2022 is the year of sales. We did some training on the software side. So I got to see, what's in the back end. Mm-hmm. And now you said it, but I'll reiterate it. I am not a coder. I'm not a technical guy. So I appreciate it when people that know what they're talking about sort of open up the hood. I can tell the difference between a Mercedes-Benz engine and like a not to pick on anyone, but say like a Firefly, Dodge Volt or Pinto or whatever. So I'm not savvy in the ways of like actual putting code and making things work, but I can tell when I'm looking at something that's a little bit different. And without going into too far down this rabbit hole, because I'm going to lose myself, I can just say, like, having a look at some of the things that a CTO of a large construction company can do with our software, it's pretty robust. And this is a function of working with Kiewit for 3 years. And my guess would be their team or their CTO saying, we really need the software to do this, 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 and this if we're going to expand our relationship here. And that might be something like, ultimately, if we're using technology and something goes sideways, people that I report to, i.e. the C-suite, are going to come and finger me and say, you need to figure this out. So I better have a very good idea of who's using what tech, if tech is involved in the accident. And let me just tell you, like, the audit trail of A to Z with the utility strike, they'll know exactly what happened, when it happened, where it happened, probably even why it happened. Why'd you hit the utility? Like it was right here. Like they'll be able to figure that out. Whereas now without the software, it's sort of like, well, I don't know, it could have been the paint marks, could have been the guy. You didn't know, he'd never been in an excavator before. It's not my problem. Who knows? But that look into the back end gave me a whole new appreciation for how robust this software is. And now I've just mentioned another thing. I had some equipment up here. So I had a Bad Alf, which is the GPS precision transmitter. I had a wand, an electromagnetic wand, and I had the pole, and I was just walking around the backyard doing some stuff, trying to see if I could make it work.
Right.
And I do have to tell you, if you're a layperson, like, yeah, you can figure it out and you can do the dots on the map, but you don't really have like an electromagnetic wand. I mean, most people don't have that in their garage. It's a sophisticated piece of equipment, right?
Right.
And furthermore, you got to know little things that I didn't know if I hadn't practiced this, which is if you want to sense an electrical wire, it has to have a charge going through it, which means, if it's an electrical to say your guest house or something like that, you got to turn the lights on.
Right.
Otherwise, you're not picking up anything.
Right.
But all this is to say that all of these little things have been factored in by the software itself, so that a CTO for Kiewit or a large construction company, if something goes sideways, they now have all the CEO wants to know is, we hit a gas line on this project. Tell me what happened. The CTO can say, I know what happened. Here it is from my perspective.
Right.
Over to you, general, contractor.
I
That's
mean,
really valuable.
It's not just that, but you think about the fact that we've got 90% of our utilities are still, the footprint is on as-built plans, paper plans in a basement or a filing cabinet somewhere.
Yeah.
I mean, they don't get saved, uploaded. I mean, we have no digital footprint of our underground utility system, and there's 35 million miles of it.
Yeah, it's pretty amazing.
That's kind of a problem. I don't know. I just see that as kind of a problem. And if we don't start changing the way that we're doing things, and you said at the beginning that I think that the construction industry, I think they're one of the slowest to adapt tech, right? They're one of the slowest to adapt tech. Because listen, many of them are craftsmen, right? They're not tech guys, they're craftsmen. They're specialized in what they do, right? They're blue collar guys, and I love them. So I'm from Cleveland, Ohio. I mean, I was one of those guys, and they're not the most tech savvy people on the planet. That's okay. But we're to a point now where this is something that needs to be addressed, right? This is costing the country, the taxpayers, the insurance companies, a boatload of money that could be used much more effectively somewhere else. Would you agree with that?
100%. I mean, this isn't something where it's like, well, I'm stealing from Peter to pay Paul. It's just, guys, everyone's going to make. Nobody wants to fix a utility strike. Like, nobody. The utility doesn't want to deal with it. The construction company doesn't want to deal with it. The workers.
And look, you could be talking potentially loss of life. You hit a gas line.
For sure.
Right?
For sure. And it's not like if you went to a utility and you said, you were the, I don't know, president. Yeah, you were all powerful. And you could say, look, utility, you're never going to do utilities. You as CEO of this utility, you are never, ever going to have to deal with a utility strike from a construction worker ever again. And they'd be like, sign me up. No problem. Like, everybody would prefer to not
to have to deal with it.
not to have to deal with it. And so you're not like, by introducing this piece of technology into the world of construction, you're not cannibalizing. You still need surveyors to go out there and do their thing, right? It's just the tool that they're using is our tool, which is way more accurate, which means they work less on a specific project, standing around in the cold or whatever.
Listen, shutting down a project for X amount of time because you can't do anything until it gets fixed, right?
Right.
Fiber, like you said, you cut a fiber line, man, there's 600 businesses that are like dark because of you.
Yeah. They're angry, but they can't call you.
Right. So what the hell, how much, what's the bill on that insurance?
Yeah. I mean,
right?
Who knows? It's a lot.
It's
like
it's a lot.
If you're, I guess it's Eric Adams now, but if you're de Blasio, I mean, the guy spent 8 years in charge of New York, and he could have left with like an initiative like this. Like, we're going to map every single asset of New York underground. Like, in 8 years, I want to deliver this to the great citizens of New York City, where I lived for a dozen years. And it's a shame that will happen eventually.
It has to.
Especially in cities like New York and European cities where they have really old infrastructure. Like, the denser it is, the high. I lived, there was like a gas line strike every 2 or 3 years. You'd maybe every couple of years, Con Edison, you'd read about it, some house in the Bronx or
and it's inexcusable now.
Yeah.
The way I view this, with you having a tool like this now,
yeah,
maybe there wasn't a tool before. And I understand there was,
Right.
The tech wasn't there,
right.
but now the tech is here.
Right.
So if you're not using it, there's no justifiable reason that you could present me that would make me say, well, that makes sense why you wouldn't use it. There's nothing you could say to me that would make sense.
Yeah, exactly. Especially like our solution is, I mean, it's not that hard to use. I can use it. So if I can use it, if I was a civil engineer and using the legacy equipment, meaning like the spray paint and the wands, I'm certainly familiar with how to use a wand. You give me this piece of software, and now they're connected via Bluetooth, and everything that the wand is picking up is just popping up on the map. I mean, to me, that's a huge game changer.
Right. All right. So listen, I think we've kind of beat that horse into the,
Sure.
But so moving forward, Joel, what is it that you see? What do you feel as though Joel is going to be able to bring to Prostar to achieve the overall vision for Prostar and Pointman?
So I think I think I definitely mentioned to you, I'm not sure if it was before
Right. Before I hit the record button.
But I'm a slow and steady wins the race guy. So I can't tell when the inflection point is, but to me, this is a story that will most certainly bear fruit for those of us that are patient. And how it will bear fruit is sales, period. And so I think it's my main component of my job is to reinforce the under promise and over deliver. And that's it. That's the number one.
So that is something. See, now that's your analyst background coming out right there, right? Because
totally
nothing pisses me off more than a CEO that likes to be a hype monster,
right?
And really good at selling sizzle, really shitty at bringing the steak, right?
Right.
Nothing because you lose all credibility. You can do it you can do it for 1 quarter. You do it for 2 quarters, 3 quarters, 4 quarters. You're that guy. You're the guy that's like always talking about how awesome everything is.
Right.
And you never make money, right? Never make money. And then all of a sudden you go from this promising thing over here to now you're shifting gears to this promising thing because it's the hottest thing on the street right now, but you never make money. That is got to be one of the most frustrating things for you to say, under promise, over deliver. Do what you say you're going to. Look, even for me, it's just do what you say you're going to do. That's it, right?
Right,
It's not
right.
I don't care if you over deliver, just do what you say you're going to do. If you over deliver, that's great. That's fantastic. If you do that too many times of under promising, over delivering, then you're a sandbagger, right?
Right,
So,
right, right.
I mean, you got to have a balance.
Right. It's true. You gotta have a balance. You gotta have a balance.
But just do what you say you're going to do, I think is the biggest thing. Execute, right?
Right. So I think, like, following on that, I think the job of anyone in investor relations is just that. You have to be available for investors. You know, the stock goes down, they get
And you have to
annoyed.
temper expectations. You
And
got
you
to,
yep.
right?
And so
This is a slow process.
yeah, it's so it's sort of like, but part of it is just letting everyone know kind of, you know, what's going on, what's out there. And I think that the company had spent some money outsourcing IR, and you know, that can work for some organizations and some it doesn't. My personal view is, I think a mix is good. You need someone in the chair. You can't have you have to treat investor relations as a serious thing if you're a public company. And when you treat something seriously, to me, that means you know, you're going to hire someone to do that job, not pay a third party who does this for lots of people. So, you know, part of what I'd like to see out of my job is I'd like to see research coverage from 2 sell side shops on us, because I think that'll give the market some numbers that they can contemplate and some points of view, which I think is good. Whether they're you know, buys or neutrals, I doubt they'll be sells, but you know, whatever they are,
Whatever they are, they are.
I think you know, more information is good. And I'd also like to see some institutional ownership of this by the end of the year. Now, whether
That's a little
kind of,
challenging, though, isn't it?
well, it depends. It is a
I mean,
little
most of the U.S. firms or funds, they're not going to be able to buy a stock that's on the OTC.
No, this is correct, but there are some Canadian small cap funds that we could appeal to if we deliver a few more big construction companies like Kiewit's size. You know, that
What about uplisting to the NASDAQ
oh,
or
that's
senior exchange?
I think that's Paige has said multiple times, that's absolutely in the cards for us. And I think that, you know, we'll do that when the time is right. I don't think it'll be this year, but it might be next year. It'll almost certainly be within 3 years if we start delivering on sales. I mean, why?
It's all going to come down. Look, here's my belief, and whether I'm right or wrong, we'll see. But I think that as the story gets out, as more people use the software and become familiar with what this does, and more data comes out from the case studies that are happening, I think you're going to get to this point where this thing starts to snowball in a big way. That's my belief, right? Because if you get it mandated from an engineering firm that this is hard spec'd in, number one, that's one source that's making it be used on a job. If the general contractor says, look, we want all our subs and us to be on the same page, and if you want this job, you're going to have to get this software so that we all are communicating on where the utilities are, right? That's another path. And then you got the insurers who say, look, if you want us to bond this job, you're going to have to use this software so that you can lower your premium and we can cut our exposure. That's 3 massive ways of getting this product in the hands of the people. We haven't even talked about OSHA, but there's a safety component there. Everybody should have safety training. I mean, not everybody on a job site drives a forklift, but a lot of the guys on the job site have a card that they can drive a forklift when they need to, right, in a pinch. And if everybody on the job site had the certification on Prostars to identify a utility whether that's his job or not his job, in a pinch, it could be done, right? Which should reduce strikes. I mean, that's what it comes down to. We're wasting a boatload of money on things that can be avoided. And I think once that starts to become a big focal point for a lot of different companies, municipalities, I think this thing is going to snowball. And it's all a matter of sales, like you said. But when it starts to snowball, I think you're going to see, I think it's going to be like a hockey stick. That's my belief. I don't know what you're thinking.
Yeah, no, I think you're right. And I think that, part of my job is to get everyone to understand, or at least the market, to hopefully when the way, okay. I don't foresee any big companies signing, coming in and signing an enterprise deal until we're farther down the road, and ubiquitous means it's everywhere. We don't have to be quite everywhere, but we just need to kind of have like enough. So like, oh yeah, I know you guys, 5 to 10 DOTs endorse you and or work with you, and you've got a bunch of construction companies. Yeah. Tell me more. I think when we're at that point, that's when the market's gonna start pricing in like, oh, we're a market champion here. Whatever piece of pie we're gonna get, it's gonna be big. From here until there, I think that because we're a micro cap, because we're on OTC, and because we're on the venture, we got to be very careful that when we sign a deal with a big construction company, the market has a tendency to get super euphoric about this. Immediately becomes, a multi-million-dollar deal. And in the land of construction, the hard part is getting in. Once you're in, then it's like, oh, this is great. But it takes time to, get from like, we'll use this on a trial basis to let's get in an enterprise deal here. So I think like the market's going to treat us differently at different stages in terms of valuation. But I think it's, going back to the under promise and over deliver, it's certainly a good thing anytime we announce a deal with anyone, because it probably means our relationship is going to grow with them. Right.
Right.
But
so
yeah,
break it down for me, Joel. After being there now,
yeah,
for a month, after doing everything that you've done,
yeah,
where is Joel now? Are you as excited as you were when you invested in the private placement, or where is Joel right now?
I'm more excited. I think between taking a look under the hood of the tech, getting to know everyone a little bit better and seeing how focused everyone is on sales, more dialogue with everyone, which you don't get the benefit of as an investor. I can tell you that I think that if I was confident, as making the investor case and investing in the deal, now I'm just super confident. I'm not worried. I'm not worried about like the share price necessarily on Monday or Friday or Tuesday. I think directionally we're going to win this thing, and I'm a slow and steady wins the race type person. And I think you need to kind of let 22 unfold, and we'll see where we're at.
Yeah. See, I love it. I love it because your background, number one, when you've seen and I've done the same thing. I've seen thousands of decks, right? And all decks look good, right? That's what they're designed to do. I mean, they're supposed to look good. However, there's a lot of holes in a lot of them, right?
Right.
And there's a lot of potential and possibility and all those keywords that, this is a $10 billion market opportunity, but there's also 25 other players, right? And they have a big head start over us, and they got a war chest. But hey, we're gonna go in there and we're gonna take over that market. Probably not gonna happen, right? This is a very different scenario. This is like this is a massive, and I don't even think there's an accurate number as to what the TAM is on this. Because I think the more that you think about it, it is so ginormous that, and then you start looking at, well, who's the competitor? And then you look at the patents and, you know, the pioneer patents, 20 of them.
Right.
And you look at the steps, the methodical and I mean, Page, you talk about slow and steady wins the race. Here's a guy that had a bad experience with a software company or software that he developed years ago, learned a hard lesson, and this time, and used everything that he learned from that and applied it to this company. And I think you would be hard pressed to find a place where he did not dot his I's or cross his T's.
Correct. Yeah. There's nothing better than you know, hitching your wagon to the train of the guy that's still hungry, saw the treasure chest, but never quite opened it as fully as he could and wants to win. I mean, that to me, that's Page. And he's got all this experience through that, through his previous companies to know what to do with this. And it's really been, we'll see through the fullness of time how much the market values the patents, but I suspect that it's going to be hard to ignore the bigger we get. So, and we wouldn't have that benefit if Page hadn't have gone through his experience with his other company,
previous company.
Yeah, to know exactly what to do and how to do it and who to hire. I mean, but this is like an annuity that has like a bullet payment of interest and principal at the end, and you just don't know what the end is, what the duration of the time is.
Right.
So, but it's coming. It's there.
It's coming. All right, Joel, listen, man, I don't, is there anything that you feel as though I missed that you want to touch on, or you think we pretty much covered what we needed to cover?
Well, I think we pretty much covered most of it. You know, anyone can reach out to me anytime. At either the investor relations email or my email, which is first initial last name at prostarcorp.com. I'm a pretty transparent guy. If I can't, if I don't respond right away, it doesn't mean I haven't seen it or I'm ignoring you. I'd like to think that that Prostar is going to be reasonably visible through this year from the investor point of view and from a product presentation point of view. You know, one last thing I would say just on sales that we didn't talk about at all, but I'd like to mention is, you know, we're doing a digital ad campaign starting tomorrow, February 1.
Okay.
This is a decent, you know, a decent 5-figure monthly spend for a little more than a quarter, and it's targeted. We have a YouTube clip ad which anyone can view, and we'll be putting up on our website, and we're sending targeted emails, LinkedIn's and Facebook's to DMs to specifically individuals in the construction industry.
Okay.
And we have the flexibility so that if any one of those, like if LinkedIn's working, we can, but nothing else is, we can divert all the spend to only LinkedIn. So we've never done this before. Like Prostar's never advertised before. One of the beauties of this deal, the private placement, initially they wanted 3 to 5 million. We ended up doing 10.2. Is now Page has extra capital to do this type of stuff.
Oh, that's what I wanted to bring up. So let's talk about that real quickly for a second.
Yeah, sure. I'm available.
As far as the amount of capital, how are they sitting on cash, right? So they're good on cash, right?
Oh yeah, there's well over 9 million in the bank right now.
Okay.
So yeah, there's not, you know, we raised 10.2, but there's some broker fees off that, so you never get the 10.2. Being a former broker, I can't
but here's
can't
the
beat them
thing.
up too. I can't beat them up too much because they got to eat, right?
Page only felt he needed
Yeah.
5 million to get to cash flow positive. That's what he felt, right?
Yeah.
And he wound up getting oversubscribed and got 10 million. He got double what he was looking for.
Right.
Okay. So
right.
Right.
I mean, and that's sticky money, you know, like there's no, they can't sell their shares for 4 months. I'm part of that group. And, you know, if we can't have the share price be over the deal price in 4 months, it probably means we have 0 sales announcements. And I don't see that as a possibility.
Well, so, you know, look, let's clarify that though. And I'm going to clarify it though about the markets, because the small cap, micro cap space has been getting pounded for 8 months. Okay.
Yeah.
So a lot of times companies get taken down because of the overall market, not because of anything company specific. Right. And it's in a very tough sector right now because it has been a very weak sector. Small cap, micro cap has been weak.
Yep.
Will that last forever? I don't think so. I think at some point things start to get to stupid pricing, stupid valuations, and just like they get overdone to the upside, they're going to get overdone to the downside, right? And then we're going to get that snapback. So to say that in 4 months maybe the price isn't lower, nobody knows. If you and I knew for sure, we'd be like, you know, better than Warren Buffett, right?
Yeah, no, for sure. Like my crystal ball's in the shops, probably the same shop as yours, right?
But the long-term outlook is at some point, this story is going to resonate. At some point, you know, municipalities are going to go like, holy we need these guys, right? At some point to identify these water lines that are 60 years in the ground. This is going to happen. I mean, to me, it's not a matter of if, it's going to happen.
Oh, for sure. Yeah.
It's just, you know, how fast does it take hold? And I think once it starts to take hold, I think it's just going to be a hell of a lot of fun. That's my personal opinion.
Hey, look, I'm with you. And we got the vest to prove it. Right?
That's right. It's probably, you know, they don't know which guy works for Prostar. But I love the story. And more importantly, I love Paige. I mean, Paige impressed the hell out of me. And when I started going through everything, my job is to look for the landmine. I'm always looking for the what can go wrong thing. And I find it 90% of the time, I will find the what can go wrong thing. And I am having a hell of a hard time finding the what can go wrong thing for this story. I really am. And I've been doing this for a long time.
No, look, I hear you on that. And I think that's a very good observation, because when things seem too good to be true, often they are. I don't think things seem too good to be true here. I mean, we're not looking at a share price of $2 to $3. We're looking at a share price of around 40 cents, right? So to me, the pricing is a function of it not being certain that this is like a trip to utopia, right? If everyone was so sure and this was great, we'd be at a way higher stupid Silicon Valley multiple. And we're not there. We have to earn it, and we're going to earn it through sales.
Yeah, but you know what's funny though, and this is why I'm going to go back to your example and my example, because anybody that's in the industry that understands, they get it right away. I mean, they get it
100%
right away. Right?
Oh yeah.
So that's what tells me the only thing that's lacking is getting it out there, right? Getting it in front of people. But when that starts happening, man, because everybody gets it. I mean, so I'm going to close on this. I'm looking at the phone where you got all these different colored utilities, right?
Yeah.
And then I'm looking so you got the type of, it looks like, what is that? It's a bad elf. So it's the locator, the GPS, It's
Yeah.
got satellites there's 8 satellites the information being pulled from 8 satellites. You've got the address, state ID, install, when it was installed, length. I mean, this is like crazy stuff right there.
Correct. Yeah.
Within 1 centimeter, you got the latitude, the longitude. There's a lot of information.
For the guy going in his backyard with a hoe, which is me, that wants to like see where his water line or gas line is to the propane tank, this is you're way out of scope on this. But for the engineer who's expects you claim 1 centimeter accuracy, they need to see all this stuff, and that proves to them that yes, okay, fine, I get it.
It's amazing. It's amazing to me. All right, so I'm going to close out with this. I'm going to show the chart because, oh, sweet. So the chart is pulling back. Actually, you just took out a little support area. I'm a technical and a fundamental guy, so we actually just took out a little area of support. Now, I want everybody to understand. I think the private placement was done at 35 cents US, right?
Yeah, about that, 40 cents Canadian. So yeah, a little less. It was probably about
32.5.
Okay.
32.5 US. It's it looks like it just hit 27 cents, which means you're getting it better than where you participated and anybody else that participated in the pipe, right?
Yes.
I don't think this is a company specific thing. I think this is, I don't know what this is, but you know, I'm as a technical guy, here's the thing. I have to always look and see, well, where can it go to? So it can go down to 21 cents, maybe go down to 15 cents from there. I mean,
look, I don't know. I mean, I can tell you this: when Powell telegraphed that he's tightening, these are figures that are not as at today, but they're as at sometime last week. The Russell 2000, I think, was down 10%. The NASDAQ was down 5%, and the Dow and S&P were kind of flattish, maybe slightly down.
right.
So I'm not bullish in the market, right?
Neither am I.
So if people need sources of liquidity, they'll save their liquidity. I mean, one thing I can tell you that this is not, no one that participated in the deal can sell their shares. So this isn't their cohort. The sellers out there, my guess would be, are people that are just like, I need the cash. I'm getting margin called left, right, and center, and I just need to raise funds.
Right. I'm not concerned with it. I mean, like I said,
know, me neither.
90% of stocks are going to follow what the overall market is doing. So, and the sector has been weak. I can only say this, that, you know, if this thing went down to 9 cents, which is possible, anything is possible in the stock market. Okay?
It's true. Unfortunately, yes. Anything is
it's
possible.
true. I mean,
True.
But here's the thing. Am I panicking if it goes to 9? I am salivating. Okay.
No.
I'm backing up the truck.
Right. Yeah. There's
That's all I can tell you.
I mean, at that point, given on a fully diluted basis, but you'd have to adjust because the options or the warrants would be so far out of the money. But the company we'd be trading at cash value. If we went to 10 cents a share on a share count of, let's just use the basic, it's about, I want to say it's about 100, let's just say it's 120 million. I think that's slightly high,
right?
But you'd have 12 million. You'd have a market cap at 10 cents. You have a market cap of 12 million bucks.
12 million bucks.
And that's our cash in the bank. So that would have to be like, I actually wish we would have fundamental research coverage out there, because I would phone the analyst and say, like, you understand we're trading at cash.
Right.
You get the software for free, you get the patents for free, you get Page for free, you get
you for free, you get everything for free. Right?
Yeah. So it's just like, that would be, there's no doubt that price, even where it is now, I think I don't want to make.
I'm going to go back to what I said not too long ago. Private placement. He wanted to raise 5, oversubscribed, raised 10.
Correct. Yeah. The
If
market.
that doesn't tell you what the appetite was or is, I don't know what does, right?
So, yeah. So that's from a sophisticated accreditor investor only market. And what we're looking at here is everything else.
Right.
Who knows what's in that swamp or that stew or that soup or whatever you want to call it. But you know, I on the trading desk, many times I'd turn around to my head trader, a guy by the name of Owen Lynch, and I'd say, "Hey Owen, why is the market down?" And he'd be he's older and wiser than I am. He'd be like, "Because there's more sellers than buyers." I'd be like, "Okay, thanks." You know,
which is not true, because there's on each side of the trade, there's somebody there, right?
that is true.
Yeah. So it's actually not true, but the sentiment is more negative than positive. I mean, it's really what it comes down to, right? Fear is a great motivator. And when people see their account dwindling every day, a lot of people for the last 12 years have never been through a bear market. They don't even know what one looks like, right?
They don't even know what trading without Robinhood looks like.
Right. So here's the thing. I've been through them. I've been through a few of them, and it's ugly. And when you think things are cheap, they can get cheaper. I mean, just like when you think things are overpriced, they can get more expensive. That's the way it works. Wall Street is not this finite, perfectly pricing mechanism that everybody wants you to believe it is. There is a lot of mispriced shit out there. Right?
Absolutely, 100%.
So to think that Wall Street's got this all figured out, they don't have it figured out. This is when opportunities are created. When people don't know what they're invested in, they don't know the opportunity that is in front of them, and they see the market, or a stock price dropping, and they panic and they sell because they don't have any conviction in what they own. That's why you have to do your homework and understand, and call guys like you and say, "Hey, Joel, what's going on with the stock? Is it, did you guys file BK or what's up?" Right? Has anything fundamentally changed that would warrant this move? And if Joel says, no, actually, things are really getting good around here, right? I mean, that's why you call Joel.
Correct. Yeah. And my personal take is we've got enough. If we don't add another sale, we have 2 years of cash burn. So, I'm very confident. It's like Bitcoin, who knows where it's going to go on any given day, but I'm pretty sure through time, it's going to be worth more
than where it is today.
But we'll see. Nothing's
Who
for
knows?
certain. No, who knows? All I can say is, with all the information that I have and the variables that I see with Prostar and my experience in the markets and seeing other companies, Prostar has a more than outsized shot to deliver massively superior returns versus the S&P index or NASDAQ or whatever benchmark you want to compare it to. And I think you just have to be patient and give us time to do our thing. We're not going to run out of cash, and it's just sales. That's it.
Right. All right, Joel, look, man, I can't thank you enough for coming in and doing this.
Thank you.
Look, I'm not telling anybody. I want to make sure this is very clear. I'm not a financial advisor. I am not telling anybody to buy the stock. That is entirely up to you. All I'm doing is putting it on your radar. I think it's a very compelling story. I think the fact that a guy who, put his money into the company, then decided to join the company, and now a month later is more excited than when he put his money in, is, to me, a very good thing, right? This is a really good thing. So slow and steady wins the race. I think that's you just got to be patient. So I'm not telling you to buy it. put it on your radar. Keep an eye on the story. I think it's going to be exciting over the next year and a half, 2 years. Joel, you're awesome. I'm really glad we did this. I want to do, you know, once you guys start to announce some what we maybe consider, you know, some significant things, maybe we could, me, you, and Paige could have another, you know, catch-up call and see.
Sure. Yeah, I'd love to.
Right?
Love to. Anytime. We'll get some news out there. You know, don't schedule us for you know, Q3, Q4. We'll be back.
Oh
for
no,
you.
I gotta feel it. All right, man. Look, I'm gonna shut this off real quick.
Okay.